Hey there, everybody. Welcome back to another 21st Century Renaissance and another open interest newsletter breakdown on GameStop. I'm your host, Dr. Michael LoPiano. We have an exciting day coming up today. Very interesting parallels, I would say, going back to August. And this is something we're going to spend some time going into today. A number of factors looking at our options data, our technicals, looking at the archetype of our price movement yesterday, excuse me, and taking a look at how that might line up with a potential transition out of this particular down cycle. So we're going to take a look at some of that today. Call attention to some of that. I'll spend some time looking at these parallels based on my analytics that I put out back on August 29th. So that's really where I'm looking at today. I will preface this by saying, right, although I think there's the way this setup is looking, there's a very strong chance that we start to move back to the upside a bit ahead of earnings as a result of these parallels. Potentially that means that what we're looking at in the background is also going through something of a parallel structure. What I will say, of course, is that as I discuss this, none of this is financial advice. None of this is trading advice. None of this is investment advice. I'm not telling you to go, not saying go buy, go trade this with options. Not saying, hey, go invest in GameStop. But I am saying, hey, this looks like this is some very interesting similarities here. Some very interesting potential insights into probabilities. So, if this is indeed right, this is a really important data point in terms of if we do see how this plays out over the next couple of days, an important data point for what transitioning out of these these deeper lows, potentially these 6-month lows, looks like. So so let's go ahead and take a look here. Let's do this. There we go. So as always, we're going to start with our gratitude here today. So big thanks once again goes out to Mate Cheska for supporting today's, purchasing today's coffee and supporting today's newsletter and video, as well as to our monthly supporters, Dats Grefto and Ken Wedmerlin. Thank you guys very much. Right, I pledge to offset a little bit of my data expenses every month, and as well as many others who have supported in the past and will be supporting in the future, who have some thanks coming up for some subsequent newsletters and such. So big thanks go out. Thank you very much. Everybody who supports, you guys help me keep this completely unmonetized, open access, right? No advertisements, nothing premium behind a paywall. Thank you guys very much. If you haven't had a chance, to those watching and listening, be sure to go ahead, thank them down in the comments, whether you're watching this on X or on YouTube. So yeah, first thing I want to point out today is pertinent to some of our technicals. So I know, technicals, I haven't spent as much time. I look at them every day. I do a lot of analytics. Past couple of weeks, I haven't done a ton of analyzing our technicals in the newsletters, in the video breakdowns. We've done a little bit in the streams. But really the issue here is GameStop's been really ignoring a lot of its technicals. That's the way it's looked, especially over the past couple weeks. So we've seen kind of technical support after technical support just get blown out on very little volume. No purchasing happens. Like, what's really going on there? We've seen some days with dark pool volume in excess of 60%. So we've talked about this. This looks a lot like price engineering. This looks like transposing the price down through these levels via these various tactics by institutions in order to, position the stock more favorably for something like a swap roll. So, Richard Newton has been talking for months about this week as being an important swap roll. We had What Can I Make Today has been talking about the importance of this week for swap rolls, especially today, this date, the 13th, as the expiration date for Credit Suisse's 2-year swap roll of Archegos's GME swap roll back from 2021. That today is that day. Today is the day that those Credit Suisse swaps expire. Were those rolled, right? Were those rolled ahead of today? Were those rolled potentially yesterday? It's a good question. But we've been talking about this period in March, going back to even some of our discussions back in when we talked about this being the beginning of a volatility cycle, of a sort of down phase of a volatility cycle way back toward the end of January, once we saw that price action there. This has been, a lot of people have been talking about this week in particular as an important week with respect to those cycles. This will mark, in fact, today marks 2 full months, or I guess tomorrow will be 2 full months of trading since we entered into that big phase down, that big like $3 to $4 drop ahead of January OPEX off of our really insanely bullish November and December and early January. So why am I paying attention to this today? What am I pointing out here today? What I will note is, and this seems to be the case, it seems to be why potentially Roaring Kitty's charts over on, I think they're on StockTwits, are, or is it StockCharts.com? It doesn't matter. Anyway, right, they focus on bigger picture technicals. They don't as much focus on some of the near term stuff. They look at daily charts, they look at weekly charts. I think he's even got a monthly chart up there. But part of that is that it's much more difficult to fake, let's say, for long periods of time, to engineer major price movements over these longer periods of time. And so some of our tools can be a lot more effective at predicting the pattern of these cycles, right? How they unfold over the course of a few months. And really we look to kind of, right, we move up in kind of 2-month phases, 2 to 2.5 month phases, and then we move down in 2 to 2.5 month phases, and then back up and then down and then up and then down, right? Something like that. And that seems to be kind of the unit of a half cycle, something like that. So what I wanted to point out is that with our price here, right, as low as it is, and it's felt like, man, how can it really go this low? And it even looks like, right, it could move lower. Certainly, insofar as if we go over, we look at our weekly chart, right, the 100-week moving average is all the way down just above 2050. So it's possible we could move down to there. But what I will point out is that right now, our daily RSI is the lowest that we have seen it. It's a 52-week low right now. The last time we saw a level this low was back in April, right? This mid-April bottom at 995. That was the last time that we saw daily RSI values this low. So although that is not, hey, guarantee we're definitely going to start moving to the upside, we grinded down there for a little bit, really. We stayed down there for a little bit before we finally exploded very violently back to the upside. I will note that. I will say that recently, the last time we got this low was just before, actually the date, right, February 7th was the last time that we got this low on daily RSI. We also touched bottom there, and then that resulted in our big up move. I don't know if there's a causal relationship, but I will say that did precede a very big up move from the week of February 10th to February 14th. So, right, really big move on February 10th, trade down a little bit. And then on February 13th, that huge move blew up from $25 all the way to $31 immediately after hours. Not saying we're necessarily going to get a move that big, but I will say that when RSI gets down to these levels, this is true, this has been true for the company over the past year. When RSI gets down to these levels, we see big volatile upward movements on GameStop. Now, historical results do not predict future performance. So keep this in mind, right? Not trade advice, not financial advice, not telling you to go out and trade this. But I am saying that when we have seen these values recently, that is what has followed from them. So maybe we don't see something. But before I jump to conclusions here, I also want to point out another few factors that also have preceded that type of price movement. So some things looking very interesting to me in terms of our price action yesterday. And I spent some time on this ahead of market open, doing some comparisons here. And we embodied this pattern, or we undertook this pattern, which is a pattern of divergence with respect to SPY with respect to the broader market, that tends to be the case with GameStop, right? When we see these deep low days, when we see big bearish days, GameStop will trade down on these big bearish days in the broader market. In fact, it'll trade deeper down than the broader market will, than its associated ETFs will. So this definitely screams institutional manipulation, institutional price engineering, taking advantage of broader market weakness in order to engineer deeper dips in GameStop. Now, what we then notice is then when the market stabilizes, we don't immediately see GameStop recover. In fact, we'll see identical price archetypes, just kind of more exaggerated in GameStop versus the broader market, like we've seen for the past couple of weeks. We've seen day after day of this. Today, broader market stabilizes, not what we see in GameStop. Okay, so we saw a little bit of stability probably from what this is attributed. This big spike we had pre-market was to better than anticipated inflation data. Very low, 2.8, I think, 6-month annualized. This is the official number, not, of course, right? All CPI is a lie. We already know this, but we talk about this. We talk about this on the streams. All CPI is a lie. But that being said, the lie number is still lower than what the lie number they would have come out with would be otherwise. So there's that. But interestingly, not what we saw in GameStop, right? We did not see this pattern. As soon as we go back to a more stable trading environment, we didn't get a lower low on SPY yesterday. GameStop all of a sudden stops being correlated with the broader market and goes and does its own thing. So we saw this. We saw it looked like GameStop was going to get a nice recovery. We started moving up. We did have this little correlation. We have this candle here, maybe correlated with some of that inflation data. We start to move up. Nice half hour of, oh, nice. We're moving into the 23s. Maybe we are getting some recovery. And then we flatten out and move down and move down. Establish this, right? We move directly down and then establish a pretty regular but not terribly exciting movement in the middle of our lower VWAP channel. And then late in the day, with about an hour to go, we just plunge diagonally down straight into the close, despite the fact that, the market's doing nothing of the sort, right? Well, sort of, but, not very different. These are very different price archetypes is my point. However, what I will point out is that this price archetype was not different than what we saw. In fact, it's remarkably similar. I'll show you this now, to what we saw all the way back on August 28th. Basically, kind of the same thing, right? Coming out of the open, we start to move up for just about the first 30 to 45 minutes of the day, get a nice weekly high. All right. We were moving up from slightly below 20 up to, well, not quite below 20, slightly above 20, move up to 21, looking good, right? I remember talking about this week back on the 27th, like we're going to get back up into the 22s. And then I think I mentioned that week trade down, maybe back below, but it looked like we were going to have that on Wednesday, maybe get up towards 22 and then flattened out and then diagonally down, just trade down. Sat in the middle of the lower VWAP channel, a little bit less price action going on there versus what we saw yesterday. Similar, very low volume day, and then right into the close, big move down. Now, was able to identify back on Wednesday, August 28th, we did see very heavy direct shorting on GameStop. A little bit harder to pick that out from our volume data. Yesterday did look like potentially a couple 100,000 shares were used for direct shorting, but they don't really show up super cleanly on the tape here. Regardless, we did get that big move down, right? Very similar price archetype. I'm not going to say it's exactly the same, but basically the phases throughout the day, how the day was set up, how we opened, where we started to go, and for how long we started to move down. Then the flat line, basically our VWAP configuration, extremely similar, and you can see this moving down to an intraday low, right? That's a low on the week. I think we did have during the overnight exto period, we did see, I think, 2173 or 2175 or something like that. So not well. Right. We didn't have overnight exto, I should say, right? The exto period, the overnight extended hours. We didn't have that in the fall. So technically, yeah, if you're looking, for example, at TradingView, if you're just looking at normal extended hours and daily lows, that's actually going to show up as our low on the week. So if you go to the daily chart, that is going to show as the low on the daily chart, not that earlier 2173 in the overnight period. Now, it was also very interesting, right, is we then got another single share right when it opens, right? Our mystery 69 buyer looks like he did not go ahead and do another 69 order, but instead a 2420 order went through on the tape. So is this a suggestion, right? So we'll remember back to the time you cover. Roaring Kitty's time you cover had two numbers, 109 in the time bar, and then 420, right? 4 minutes, 20 seconds. So 69, 420. We've had 69, 69, 69, 69, 69, 69, 69. And what do we get here? 420. Interesting. So is this a potential signal from Roaring Kitty that we're going to start moving to the upside now? Good question. What might this price archetype back from August 28th have to do or suggest with respect to that idea, right? Okay, so we've got 52-week RSI lows on the daily chart. We've got now this potential tinfoil number coming up from these weird overnight exto buys at 8 p.m. Eastern time every day. Now, right, we see this parallel price archetype on these 2 days here. What was so significant about that? Well, you'll recall if we go back, let's take a look over here at our TradingView daily chart. So let's close this for a bit, broaden this up. So you remember right back here, we had come down, right? So big excitement, big double top here on Roaring Kitty's return. We trade down, we got the stream down, 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 down. Then we get this little shadow effect. We get this little afterglow, let's call it, almost back up to 30 in mid-July, and then we just plummet, Nikkei crash, basically second half of July, first bit of August, we bump all the way down. It only shows 1878 here, but in the after hour, in the pre-market period, we actually got all the way down here, right? All the way down to our 200-day moving average, which was at 1750. And then we started to move back up a bit. And then when it looked like, okay, maybe we're going to recover into earnings, we got shorted back down all the way to, let's see, just below $20, I think. Yeah, actually, it's that 1987 value that we just pointed out here. And that day, right, big shorting, big move down, and then all of a sudden, right, so actually that came a couple days after Ryan Cohen and company announced that earnings would be taking place on September 6th. No, excuse me, September 10th. September 10th after market hours. If you'll recall, the original estimate was published as being on September 6th. And it was on the 27th, I believe, that Ryan Cohen and company announced that it would be taking place. Maybe it was the 26th. That it would be taking place on the 10th of September after market hours. So then we got shorting down. And then that very following day, we got a big move up. So we started to move down early. We had a low. We opened at 2050. We actually moved up a little bit in the pre-market. So we went from slightly above 1987, opened at around 2050 in the pre-market. I think we moved down a little bit again on that day. And then bam, we shot up to just over 22, closed below 22. And then on Friday, we had another huge move up all the way to 2350, which very interestingly is where max pain is for this week. And then that following Monday, we opened up very high and then moved down. And then potentially on September 6th, we got this second kind of gamma ramp, this end of week gamma ramp, stimulated both by the way that market makers were exposed to our call structure, the gamma values of all open calls, and the volatility effect in the background. So we were 9 trading days out from earnings. We're now 9 trading days out from estimated earnings. And the IV values caused, the appreciation of those IV values caused a very high volume of share accumulation on the part of market makers as they attempted to hedge those positions amid that very rapid and very volatile upward price action. So, right, we were anticipating. I was anticipating back end of August we would see something like that. Right, this was basically testing this thesis of, we have this kind of IV thump effect that happens 2 weeks out, typically from earnings. Will they rock the price up? Will they send the price up a bit to get not only an IV crush, but a price crush going into Q2 earnings? And we did end up getting that. So, but what this looks like is our setup here is very similar to what we just saw, right? What we just saw yesterday is very similar to what we saw on August 28th. And as we go take a look now, our options environment is also looking very similar. Some key ways to what we then saw unfold on the 29th and the 30th. So let's bump back over to our article here, and we can take a look at exactly what's going on there. So yeah, not a ton of options activity. Again, just like we saw back on the 28th, very low. In fact, this is the lowest amount of premium I've seen spent in the options market all year. Slightly bearish, but only by a few $100,000. We didn't crack more than 3 million in premium, either in bullish or bearish directions. Only about 500K spent at the mid. Max Pain staying stable at 23.50. Next week, it did move down to 24.50. I think that would have occurred yesterday, so not as a result of, or the day before, not as a result of yesterday's price action. Still in that kind of 25 area for March, right? Lower, 24, 25, 24 now for early April. April OPEX, we do have quite a lot of options kind of piling up. But what I want to point out here and call our attention to is right now, our in the money, out of the money call ratio is at 99.6%. It's actually greater than 99.6% of our call OI is out of the money. That does not happen very frequently. In fact, in the past year that I've been tracking options data, this meticulously, we have never, ever had a single options expiry on GameStop close with 99.6%, greater than 99.6% of our calls out of the money. Hasn't happened. Now, does that mean that it could happen? Couldn't happen? No, it definitely could happen. But we've never seen that take place. And in fact, when we saw a similar number, I think it was around 98.7, got up maybe as high as 99.1 2 weeks ago, we still ended up closing with our call numbers at the end of the week much closer to that 90%. 90% of out of the money calls is much more typical for what we see on GameStop on a regular basis. So, but okay, what's so significant about that 99.6 number? Okay, the only time that I have seen calls out of the money at a ratio like that at 99.6 or close to 99.6 was in fact in the pre-market period of August 29th. That is the last time I saw a ratio that egregiously out of the money. 99.6. In fact, it was 99.563, I think it was. And in fact, if you want to go ahead and take a look, I'll also post this down in the description of this video. If we bump over, we can take a look at my video my article back on August 29th, right? So I noticed this was really weird. And I spent several hours that day, started working on this significantly before, right before our trading day. And right, we started that trading day. We were going into that trading day with 486 out of 110,717 calls in the money, right? So 99.532% out of the money for that particular week's expiry. And I said, okay, what are the odds, right? An at the money call. What are the odds that an at the money call, it was around $20, gave all this data to ChatGPT at the time, OpenAI. What are the odds that this will occur? Like that the $20 call, the at the money call, will expire out of the money this week, going into this Thursday trading day on August 29th. And OpenAI came back and said, the probability that this occurs is so small, it is statistically insignificant. It is effectively zero. So what we're looking at now is that the percentage of calls that are currently out of the money is greater than that day. So for example, we're trading at around $22 right now. This would suggest that the probability that a $22 call will expire out of the money this week is effectively zero. In fact, it's an effective zero that is greater than the one that we saw on August 29th. Just putting that out there. Like I said, not financial advice, but basically my conclusions there back on the 29th were, hey, if this does occur, this has to be an engineered event. The odds that this would occur are so low that this essentially must be a crazy engineered event. And right, okay, that's not super helpful for trading, but on the one hand, extraordinarily high probability right now that an at the money call will expire in the money. Extraordinarily high probability. But as we know, this is why I'm saying not financial advice, not trade advice. Like even, we can arm ourselves with these probabilities, but also know that theoretical probabilities also do not carry the same weight because of what we know, because of how we know institutions can engineer and manipulate the price. But I would say, based on what we've seen, based on what, we've seen a number of people who work on this topic, right? Ultimator says we're getting really close to a signal. Basically, we should be seeing one right now on his indicators that indicates, a bottom. We're seeing RSI data is telling us that we're at 52-week lows. We're seeing, Richard Newton and What Can I Make Today talking about this week as being these key swap rolls. These are, Richard Newton yesterday. Go watch his video if you haven't yet had the chance. I'll also link that down in the description. Look, his video from yesterday talking about the co-occurrence of these lows in XRT. XRT being on reg show, seeing very low numbers in terms of shares outstanding for XRT within a few days is usually followed up by a very large move to the upside. Now, it doesn't have to be May levels, like May 2024 levels, but it usually correlates within a few days of a move of that size. And of course, he's been talking about this week as a key week for that, given, months ago, he identified the 11th as a swap roll date, just based on him tracking the lows and some really big anticipating, theorizing that these lows, these very strange kind of diagonal lines down into these lows, had to do with price engineering in order to support swap rolling. So we have a lot of people saying, hey, look at all these different factors coming together. Now we have this too. We have this OI probability, this out of the money probability, and at the money effectively zero. The chance right now of an at the money call expiring out of the money right now is effectively zero. Just keep that in mind. We saw some also weird IV stuff yesterday. We'll come back to our gamma exposure in a bit. We saw some weird IV stuff. We got an IV crush. I was heading in here. I was looking, I think I called this out earlier in the week, looking at, potentially shorting the $29 calls into March 28th. I still might do this. I'm not sure. But I had a hard time getting a fill at the prices that I was looking at, right? And no matter what I could do, every time, right, the bid-ask spread was moving around anything that I'd like to trade, and then IV would dump, right? We got this big IV dump early on, right? So kept trying to do this, kept trying to get in, couldn't get it, and then all of a sudden the price would really run away from me to the downside, and I would go, well, no, I'd rather wait. So weird IV crush here may have come from the fact that we did not see, we still don't have an official earnings date announcement from the company. That may play a role, but it may also be that brokerages understand maybe what's coming today or tomorrow if we do get this type of event, and that they are, trying to prepare, trying to incentivize buying to a certain extent, trying to create more favorable exits for those who are short calls, something like that. Hard to say. I don't want to get too speculative there, but something to point out. This IV environment that we saw take place yesterday certainly did favor the purchase of calls a little bit more than usual, right? So as always, long calls are structured, right? Long options are structured to favor the dealers all the time. If you are trading long options on a regular basis, it is a statistical certainty that you will lose. That is how they are built. That is how they are structured. purposefully. They are purposefully structured so that you will lose if you are trading them long. So just keep that in mind. I mean, right, there are some moments, right, if you can call the moment correctly, of course, you get spectacular returns if you can get it right. But they're designed to, dangle that bit of fruit for you and then, ultimately not deliver on it. So keep that in mind. Now, I did do a bit of a comparison here on our GEX data. What I will point out is we do have a serious amount of put GEX to our downside. If we see a big deep red day in SPY in the broader market, I mean, that's going to suggest that maybe we run down here, maybe run down to 2050. If it's another big red day, I'm not saying necessarily that we do. Maybe there's something else that overpowers this dynamic, but we do have that basically sitting right below us to our downside if we do see some kind of major move of that sort at this point. Now, that being said, we also have a kind of setup here above us that does look similar in some ways to what we were looking at back on August 29th. So some decent size, right, at 20 and at 21, right, some decent size, 2150. Not quite as much net call gamma above us. I mean, we do have decently sized, a bit of net call gamma above us. 2250, 23 are actually pretty neutral. 22 is negative, right? Put gamma largely there. Not quite the same. We do have a really big position at 25, a really big net call gamma position at 25, just like we had at 22. So we kind of got this double effect of we moved up to 22, actually above 22, then we traded down. Then the next day it resumed and it went all the way up to 2350. Do we necessarily get that? It depends on, I guess, what buying ends up looking like today. We do have some at 26. We do have some at 27. If we really strongly start to move up here, let's say if we run, I don't know, if we run up to 24 or something like that today, could we potentially move into this region? It depends, right? It's going to depend really what's driving this in the background. I don't think really what's driving this is organic options activity. I do think options buyers do exploit this and they can cause this run to go stronger. But really there's something going on in the background, maybe ETF related. Again, go ahead and watch Richard's video on this from yesterday. ETF related that to a certain degree might correlate with this type of price action that actually causes this price action, and then options buyers kind of piggyback onto it. So little different in that case. I mean, we did also have big put positions to our downside back on the 28th. It did look like we could have run down to 1850, just like right now it looks like we could run from 22 down to 2050. Doesn't mean that necessarily has to take place. I do want to point that out. I think, right, because that's a possible scenario. We do have a lot of factors that are converging that say, hey, it looks like we could really strongly start moving to the upside in the interim. I think that would make sense as a setup going into earnings. Before then, they would attempt to drop it off after earnings, something like that. But yeah, a lot of signs pointing to that. And I will still say that all things considered, right, in terms of what we're looking at in our options data, what we're looking at sort of historically as well, with all these factors converging, theoretically, we are looking at the odds of an at the money call right now expiring out of the money for this week is effectively zero, given the similarities. I mean, right, theoretically, not taking into account, say, stuff in the background that we can't measure, but I hope that's helpful. I hope that's useful for you guys. Certainly, that's what I'll be watching for today. Let's see what happens. And of course, please be careful with your trades. Understand the risks involved here. Do not take this as an exhortation to go and make trades necessarily based on this data. But yeah, let's see. Let's go GameStop. Let's see what we can find out today. And yeah, we'll see you guys tomorrow. Take care now.